Quick disclaimer, guys. ASIC trader myself and master of the market is an authorized representative of ShareX Australia, and this content is for general educational purposes only and does not constitute financial advice. A little bit about me. I've got a Bachelor of Education. I'm a certified financial technician and a certified level 1 Elliotician. All right, let's go into it. So before I jump into the charts, I just want to say a big thank you to everyone that came to the Sheridan from our OG cohort. Graduated. They've been studying technical analysis for 12 months. And yeah, we had a fantastic event, as you can see here. Tung and his wife did an amazing story about their journey in finances and just their journey in general as a couple as well. It was actually phenomenal to hear about. So yeah, just want to say a big shout out to the Sheridan for hosting the event. It was world class. Thank you very much, and for everyone that made the effort to make it. I know there was a whole bunch of you that came from Perth. Which is not an easy journey, and some I know had a couple hours drive just to get to the Perth airport anyway to get there. So no, it's really good to put faces to names and see the people that I've been speaking to online for over a year now. Some people I've been in contact with online for multiple years that have been following me and all part of different groups, etc. All right, so what I want to do today is do a bit of a big deep dive on the markets, because there's a lot of big blinkers on right now, and I just want to make you guys aware of what I'm seeing, because then it's all about preparation is the key to success. Okay, so I'm going to talk about key levels to watch for, and if they get broken, I'm going to tell you why things could get nasty really quickly. All right, so let's pull up the charts. All right, so this is the S&P 500. And as you can see, we've been in a very clear uptrend, higher high, higher low, and you can just see it's been zigging and zagging on its way up. Okay, so nothing to worry about whatsoever. What I want to do is go through, and the way I always talk about the markets, and a lot of people, man, how do you always get such a good success rate? How do you have these high probabilities? And I always say, because when I look at one thing, I don't just look at one chart. And the way I like to think about it is, if I were to say to you right now, you can have $100,000 to go and buy whatever car you want, and that car's got to hold you for the next 5 years or something. You wouldn't just go down to the car yard and go, hey mate, I've got 100K, give me your best deal. Okay, what would you do? You would do a lot of research. You would, go online. You would probably spend months unpacking what would be the best deal that would hold its value and give you the best deal you could get. And then when you do get it, let's say the wife was like, why'd you get that one? You could justify, or the husband, you could justify why you go, oh, well, babe, this one, it's selling for 140K everywhere else. And look, I can get it for 90. So I'm getting it for a steal, but you've done your research. If you apply that same strategy to investing, you'll be surprised at how much you will improve. People put more effort into putting $2,000 down for the newest iPhone or newest phone. They'll spend weeks and weeks researching that, or a laptop or something, yet they're happy to drop tens of thousands or even hundreds of thousands on the stock market without doing a single little bit of research. And it's just ludicrous. That's what I'm going to show you today, is show you how I'm painting the picture, because the market tells you a story if you know where to look. Couple of things I want to show you straight away is that last time we had this big bull market up until here, then we had there. If you look, we have hit pretty much the exact same distance and size and time that we did last time before we had a big correction as well. That's just one thing that I'm pointing out right now. So going off history, after a big long bull market like now, history says that we're kind of due for a correction. Okay. On top of that, what I also like to do is I like to unpack tops. And how tops work is that what you'll find is that you get a top, and then often what will happen is you'll get a little spike up to grab the liquidity before it goes down. So see how that you had a top and it come up, grabbed it, and then went down. Okay. See how here it's same thing on this one. You got your resistance, and then anyone that went short there, what does it do? It comes out, grabs their stop, and then goes down. Okay, same thing happens on the bottom. See, it comes down, grabs the stop, then goes up. All right, so what we're looking at right now is the same thing, in the fact that I have noticed that from that resistance there, we did come just above and grab that liquidity from there. So again, it's just an observation, not acting or anything on it yet, just something that I noticed. At the moment, this thing is in a very clear uptrend. So if you look, what you're always looking for is when they're selling, the next time they're selling, is it higher? And you can see it's higher. And the next time they were selling, was it higher? Yes. The next time they were selling, was it higher? Yes. Next time, was it higher? Yes. And next time, was it high? And yes. What I have noticed is for the first time, we are selling equal, but it could just be equal like that one there, and we just have a little dip. But what you've found is every other time we've had one that's equal, it then didn't go below the buying. Okay, so it's the same thing going for the buying. So let's make the purple the selling, and let's now bring up where the buyers come in. Let's make this one green for buying. So they bought there, and they bought higher, then 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 they bought higher, and now they bought higher. So see how the green dots keep going up? So the red dot's going up, the green dot's going up. That's called bullish market structure. That's what you want in a market. When that changes, that's where you've got to worry. Okay, and you can see it here. So then all of a sudden, look, lower, lower, lower. See how they're going higher? Then all of a sudden they're going lower. And then same with the selling. Let's make these different. Make them back to the purple. See how they're going higher, 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 higher. So see how all the purple are higher, all the green are higher. Then all of a sudden, look, lower, lower. Okay, you're starting to see the difference. So at the moment, we're good. We're here. However, what we're going to be looking for is this. If this happens, then we know that we've got to change the market structure and things won't. Distance is the same right now. And what I'm also seeing is the same blinkers. So the same blinkers I saw on this market, which enabled me to see the top on that and get out, I'm actually seeing right now. So as I always say, we don't act on blinkers though, or signals, but I am very aware that they're happening. And because I'm aware, I'll never get caught off guard. Okay. The market is very much like a car. So when you go driving, cars don't just move around without letting you know what's going on. You know, they'll use their blinkers left and right to let everyone around them know I'm turning left, I'm turning right. Sometimes they put it on early, sometimes they put it on later. The market's the exact same. The market will put on blinkers and tell you when it's going to turn around if you know where to look. And I'm going to show you an abundance of evidence as to why there are a lot of blinkers on right now, which is why I'm being very cautious right now. I'm not exiting the market, but I'm not bullish right now. So what that means is that I'm holding anything I'm in unless it changes, but I'm not looking to add positions right now because I'm seeing some blinkers, and you'll see what I see in a moment as to why I'm going to play a bit of defense. All right, so let's go back here. Now I just want to unpack how it works. And there's a thing, RSI, a lot of people use it for oversold and overbought. And to be honest, that's probably the worst case you could use it for. The most powerful thing to use it for is divergence. What 95%, actually, I'd probably even say 99% of traders use it for is then they just know one form of divergence, which is regular divergence, okay, which is really 1/3 of the pie. Okay, they're only using one part of it, and they wonder why divergence sometimes keeps going down and things like that. So what you've got to realize is that there are lots of, this little thing here is actually magical. Okay, there's regular divergence, there's directional line divergence, there's hidden divergence. There's, like, in Master of the Markets 12-month course, I spend a whole month on RSI and divergence. That's how much information there is to learn about it, a whole month. Okay, so one of the things you're always looking for is when you're not, this thing here should always do the exact same thing as the price. When it's not, that's called convergence. When it is, when it's not, it's called divergence. And when it's not doing the same thing, there's different forms of that divergence. Okay, so for here, you can see how this went up, higher high, higher low, higher high. So here, higher high, higher low, higher high. So it's matching. Okay, then what you can see from here where it went and did a double bottom, but see how now the RSI it went lower. So it's not doing the same thing. Why did the RSI go lower and the price action didn't? That is what's called hidden bullish, which continues the trend. However, it's still divergence. So what that actually now means is that from that point there, the trend is weakening. Okay, but the trend can go on for a while. Look at that, mate. If I were to say it's weakening there, you're like, you're crazy, man. It went from 3,500 up to 4,800. But this is how the market works. What you'll then find is that this went into, you can see how this is going up, but this is going, I'll show you. This is going sideways. So it's not matching. This is what's called directionally aligned divergence, when the price is going up at a different magnitude to the RSI. And this is what happens. It can bounce around and bounce around. What happens though is that 9 times out of 10, the price will come back to where the divergence started. And where did that divergence start? Here. So if you look, where did the price come back to? Here. Okay, came exactly back to where the divergence started. Okay, so that's where the direction. So we were all good there. The trend was strong there, and everything from here is what's called divergence, which is where you're getting weakening trend momentum. But as you can see, it can go on and on and on and on and on. Okay, we have the exact same thing going on right now. So as you can see here, from what we did here, you can see that we went higher high, higher low, higher high, equal high, higher high, higher low, high high, equal. So everything's all perfect there. Then we broke up. Everything's all good here. And then here is where, so this moved down here. See how this is higher here and then it's lower here. This is what's called hidden bullish divergence, which means you're going to continue the trend. But what it also means is that this whole move down here, so everything now from anywhere within here is now weakening momentum. And as you can see, what happens, we're going higher, but we're getting the exact same thing as we got last time. We're getting that sideways direction line divergence. So price is going up, yet look what RSI is doing. It's actually starting to go, it's weakening. Okay, so again, the blinker has actually been on from this point here. All right. If you just use your Fibonacci, things like, as we know, market zig and zag. So if you also then combine that with things like Fibonacci, you can see, look, this came down not only to its direction line divergence, but also the Fib 500. So you have that perfectly, this is what's called confluency, where you get two things telling you the same story. So Fib 500, along with the direction line divergence where it started, perfect level to look for a thing. If we do top here, and the only way we know if we have is if we break below this level here, okay? If, let's say it is in now, we would do the same thing and we would use our Fib level and start to look and see. And what you can see is that, remember I said this is the point where the divergence started to happen. So we were strong up to here, but everything up from here. So you can see, even if we came down to the zags and here, the Fib 618 that came back to here, it would bring it back to that divergence level again. Okay. If we started to then break out below this 618, that's where things get really scary, because then I'd be like, why aren't we buying up that zag zone? So there is potential for a big correction down to the 5-1 or the 4-5 even, which, you know, is a 15 to 25% possible drop. But again, I would need to see market structure change, which first of all, I'd need to see that 575 level drop first. Okay, but just watching some blinkers. As you can see, we've started to come off the trend. So even a pullback to this trend could be just typical and normal as well. We are getting divergence. Just what most people know is the just bearish divergence. So as you can see from this point here, going higher, divergence, going higher, divergence. So we're starting to really, this part here is really, really starting to weaken now as well. If we now use things like what's called Elliot waves and stuff like that as well, we can actually get an Elliot wave count within here. Okay, so what you've got here is wave 1, ABC, flat correction 2, then you've got a wave 1, 2, 3, 4, 5, so an extended wave 3, sharp wave 4, which was the Japan carry trade. And then you can see here 1, 2, 3, 4, 5. So then you've gone up for your 5th wave. What you then, to then go back and check your Elliott wave counts. So if I do that and I go like so, make that lower degree below. Okay, so I'm looking at that. So a completed 5-wave cycle. What you then like to look for is divergence between wave 3 and wave 5, which is the public participation in the excess phase, because the excess phase is where it's supposed to get weaker momentum because it's the retail trader. So what you can also see is you've got divergence from the 3rd to the 5th on the extended wave. Then you've also got divergence from the 3rd to the 5th on the last wave as well. So it matches that as well. So there's more evidence telling me that we could be in for a major correction here. Okay, that's the S&P 500. If, again, there's no change in market structure yet, if we take out this level here, then I will worry, because then I'll wonder why they're selling equal, why aren't they buying higher anymore? And if they start selling lower, then, you know, that's the kind of thing where I'm like, get out, get out. All right, so I've shown you some stuff there. What I'm now going to show you is some more evidence as well. So something else I want to show you is the Dow Jones. So let me split my screen. Is the Dow Jones Industrial on this side, and I'm going to go on this side, Dow Jones Transportation. Ooh, I can't handle green and red anymore. Let me just get that out. It's funny, I used it for so many years, and now when you get away from it, it's hard to go back. All right. I'm sorry, I've got to put black on this so we can see the candles properly. All right. So this is the industrial average, is the transportation. If you've studied Dow theory, you know one of his main tenets is that the indices must confirm. And I'll just explain it and show you an example of it, and then I'll show you what's happening right now as well. So back in the COVID drop, okay, and this has happened before every single major drop too, but I'll just use the COVID drop for now. And we're on daily, weekly, so I'm just going to change that to the weekly so we're on the same time frame. All right. So remember how I just showed you with the RSI and the price action, they should be matching, doing the same thing. When they're not, you get divergence. Same thing with the industrial and the transportation. Okay, and the transportation is often a leading indicator because things will go wrong. You know, less deliveries will start happening before it's happened. Because if you think about it, if you own a shop, you know, and sales are a bit down, you're like, oh man, I ordered 5,000 units last month, but sales are down. You know, I'm only going to order 4,000 this time. Less packages, less deliveries, transportation. Okay, so it's why it's a leading indicator. If you look here, and if we go from all of this, you can see how here it's all going up, here all going up, and then there you've got a nice double top, here nice double top, it's all matching. Here you come down in three wave, here you come down, it's all matching. And then this is where now things start to change. So everything here is the same. Double top down, new low, everything's they're matching. Now we're getting divergence, because can you see now here how from this point here, the industrial made a new high, but the transportation never did. Okay, see the divergence? Lower high and a higher high. So this is the transportation given as a leading indicator that deliveries were less and things were not looking as good. Okay, as you can see, that period went from December 2018 to January 2020. So it went for a long time, over a year. So January 20. So just over a year. So for a whole year, there was massive divergence on that. So it doesn't happen straight away. Blinkers can go on for a while. So same thing here. What you then want to look for is where it breaks key levels, where it goes into convergence. Okay, so what I'm going to do now is go into the daily so you can start to see where things changed. And here, daily. All right, so what you're looking for is where it moves into convergence, which is where they're doing the same thing. So we're buying higher, we're buying higher. And you can see even at that very top point, why did the industrial make a new high, but the industrial made a new low? And then see how it changed market structure. That changed market structure. This broke support. Thank you. I'm out. All right, that's what. If you've a little assignment, if you go and look at GFC, tech bubble, 87 crash, 70s, Great Depression, it happened on every major crash that the transportation average was showing you before the industrial. It starts to diverge, starts to not. So they match when things are healthy, they diverge when things aren't. Okay, now that you've seen that, now let's look at what's happening right now. Okay, so here and here. All right, so that is the top of the last bear market, 2022, which is also here. Okay, so from there, so again, you can see where that top, so see how that made a lower high and that made a higher high. Okay, so you can see it even there as well. But looking now, look at what's happened right now. You have a brand new high on the industrial by far, but you have still not made a new high on your transportation. Okay, still massive. This has gone on from, as you can see, they matched perfectly here, here. You know, this has gone on really from this October 2023 from here. This period, they were matching all good until here. This kept going up, and then this stopped. So what we're looking for now is the exact same thing I showed you in the COVID, which is where they start to, so they're diverging right now. And they're also even diverging from here. We've double topped, but now we've had a lower high. If we go below there, you've got a change of market structure. If this goes below here, you've got a double top, change of market structure. So that is what I'm looking for. If that loses that level and that loses that level, then you can start to see how you're breaking down some key levels and changing market structure. Look at that. Okay. Same thing with this up here. Start breaking up through here. Double topping, breaking through some key levels as well. All right. So they are my confirmation things that I'm looking for there to let me know. So as you can see, you're getting divergence on the bigger picture, but you also then got it on the little picture, just the same with COVID. You'll get on the bigger picture, but then you also got on that little picture here. So that's what we're looking for. If it changes, just like it did here, changes here, confirmed with the double top, just like we did here, back here, then that gives you an exit point. Okay. You can always get back in. Remember, it's not like an ex-girlfriend where you break up, you can't get back together. Okay. If you exit a market, you can always buy back in once it's confirmed that the low's in. People forget that. And as Warren Buffett says, it's better never ever lose money. And it's better to leave money on the table sometimes than to lose money as well until you've got more confirmation of things. So again, there's more blinkers. I've shown you the RSI divergence, all of that. I've shown you the time exact same. I've shown you now divergence in the industrial and transportation average. Now I'm going to show you another thing. Okay, something else. And again, you know, it's great to look at charts and that. What I like to also do is look at fundamentals and also macro as well. Okay, so if you look at the fundamentals, as you can see, as we know here, the Shilley P ratio is up here above 30 here. So this is the, you know, only the fourth time in history that we've been above 30, and all those times have never ended well. But what I'm looking at, so even that, just we know highly overvalued, things like that. But what I'm mostly looking at is the divergence right now. Okay, so again, I've been talking about divergence, showing you some things. You can also get divergence in your FA to your charts as well. So can you see how right now the PE ratio has not made a new high against that November 2021 top? If we look at where that is here, that's here. Okay, so here, that is that one there. Actually, let's bring the chart over, it'll be easier to see. We might go monthly. Go log, and we can zoom out and see everything. All right, so brought up my chart here. So see how it's divergence there, but you've made a new high there. Okay, you've got to wonder, why is that happening? I'm going to show you in history where, again, just like I've shown you, it happens at major tops as well. So if you look here, this date here, see this is, so let me go back to the proper one here. So this date here is November 1965. See how then it's made a lower high in 68. So 3 years later, it made a lower high. So the FA was telling you divergent. Let's do those same dates on here now. Okay, so 65 and 68. This is 65 here. Okay, and it went higher in 68. Then you can see, what did you get? Then in 73, it went lower as well. It came down to 1973, it came down lower again. If you look at 1973 here, it went higher. So can you see how also you're getting divergence? So why is this going down and this is going up? Okay, so what did all them? So divergence, crash, divergence, crash. Okay, so then you're getting divergence in your fundamentals, which is what we're also getting right now as well. So if this pivots here, starts to go as well, then you got to wonder, hang on, what is going on here? Why is it diverging up at these points here on the fundamental scale as well? Another key thing, which I think a lot of people have just kind of forgotten about, is that, you know, we've got the yield curve. The yield curve, as we know, came in. You don't fear an inversion, you fear an uninversion. So it came down here in 2000, came down here in the GFC, came down here in COVID, came down here again now, but the crash happens when it inverts and gets back up, in particular when it gets up to this red line. Okay, so we have uninverted and come back, and so has the 3 and 10 month as well. So this isn't a very clear uptrend, and when things start to get up to around here as well, things are going to get super nasty. So again, this is a macro thing telling you that, guys, the yield curve is, this is a recession indicator. It's forecasted all the major tops, and it's also telling you to be careful. All right, so it's just, there's so many blinkers on. It's just not a time to just be blindsided. It's not a time to just set and forget and just sit back for the next 5 to 10 years. Because if you had bought during any of these periods here, you actually had lost money for over 10 years. And the thing is, people will try and milk the cow for everything it's got. Here, and if you bought anywhere from 98 to 2000, you're here buying here going, yes, it just keeps going up and up, and you think you're rich and you think you got that. But if you bought anywhere in that period there, if you look, this is where you bought anywhere in that last 2 years, you had dead money, did nothing until here in 2013. Okay, so that's over 10 years later. So yes, even though you're getting short-term gains, and there could be even more, you've really got to analyze and think, what is your game plan here? Because if you're not willing to hold for 15 years for zero gains, like just knowing that that's a possibility, then you've got to think what's going on. And same thing with back here. If you had bought anywhere during these periods here, again, that went sideways for over 15 years. We didn't start making new highs again until 81. So if you bought anywhere in the 60s, you had dead money for 10, 15 years as well. Right? If you bought anywhere during the GFC, anywhere here, dead money until here in the 50s. That was over 20 years later. So you've got to remember, yes, the market will always go up. But as we know, markets zig and zag on a smaller scale, a medium scale, a large scale, and a very large scale. Okay, and this is the larger scale corrections. Big correction, big correction, big correction. Okay, is there another one? We don't know. But history tells us that it's time to just be careful. Looking at that on the monthly, if we were to do our channel from the top of the GFC, Great Depression up to the top of the tech bubble, bring it down. Again, you can see that we are up at this level right now. Okay, you can also see that we're getting divergence on the monthly from the 3rd to the 5th and the 3rd to the 5th on the last one as well. Okay, so you're getting that weakening momentum coming up to your resistance band. So just another thing to be careful of. So I guess what I'm just trying to say, guys, is preparation is the key to success. There is a lot of blinkers on fundamentally, macro, and TA-wise right now. What I'm particularly looking at is zooming in and looking at those levels. And if I see even now coming up here, you can start to see even from that for their divergence, from this move to here, the double top which actually made it just a new high divergence. If we start to break below this level, I can see significant downside. And I'm not hanging around. I could be wrong. It might be, but I'd rather be wrong and I can always get back in than be caught holding a bag that I'm holding for the next 15 years. Okay, so just be careful, be aware that it's a possibility, and keep an eye on those key levels. This is the NASDAQ S&P 500 ratio as well. And again, this is another thing showing divergence. So if you pull up, remember I showed you from that October 2023 is where we started to see divergence in the RSI and that. If you look at this one, you can start to see we're in a nice uptrend. And then it's until we come up to here, this is the nice uptrend. And you can see from there, we've been going sideways. So even this ratio has been going sideways while the market's been going up as well. If this starts to break below the level I'm looking for, is this level here. If this starts to break below this level, right here, if we break below that 3.48, 3.5 zone there, then look out. Okay, because then you've got to wonder, again, going to our market structure, higher, higher, higher. Why are they selling lower? Okay. From the buying lower, lower. I mean, higher, 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 higher. Why buying lower? So why are they selling lower? Why are they buying lower? If we start to go, then that's a change of market structure. That is then risk on coming off. And that is then where things get nasty. Okay. And again, if we zoom out, you can see that this ratio is up at tech bubble levels, which is where, again, the Shirley P ratio is up around those levels again, stuff like that again. So as you can see, this is the bullish market. We've been going sideways. Does this come back down and do a double bottom? Maybe. Does it come and do a double top? We don't know. But again, I'm not sticking around to hold these things. Okay, so I just wanted to really show you that, just so you know what could be coming, because I hate it when people get blindsided. Okay, and preparation is that key to success. This is how, as I talked about with Bitcoin and others, so many people have been blindsided on crypto because they were just caught up in it has to go up because of the halving cycle, because of this. As you guys know, I got out of my crypto just before Christmas, before I flew to Canada. And, most people are down a significant amount now since that top. So, the whole index is down 50%. So some individual ones are down 75%, even 80% just in a couple of months, because they were blindsided by halving cycle, Trump coming in, that they didn't actually look at charts and see what could possibly be happening. All right. So again, doesn't mean I can't get back in. Now I'm out. I dodged that bullet and I can get back in. You can always get back in, but you can't get out once you're holding the bag. And that's the problem, because what happens is you're already down so much. You're like, oh, I'm down so much, I'll wait till it bounces back. But then it never bounces back. And then it gets to a point where you're like, oh, well, I'm down this much, I might as well hold. And I guarantee you've all got a story like that. Okay, so what you should be doing is selling in a strength, not in a weakness, and then realizing that. So again, crypto bros are going to be calling the bottom here. It could be a good bottom and it could come up. If the market does roll over like it did, crypto will not bottom here and go higher. Okay, so just so you're aware, again, this thing, at the moment, we are in a sideways market. So at the moment, they are selling up here and they are buying down around these levels at the moment. So how do you know this doesn't come back down and do a whole big sideways thing again like that? You don't know. Okay, how do you know this is not just one big sideways trend? Don't get fixated on a halving cycle or things must happen, follow data. Data doesn't lie. And that's what I posted about in that post the other day. So even after calling all this one here, and I was talking about this is going to hurt a lot of people's psychology, and I think it is, because everyone was just screaming bottom and they're just programmed and they were caught off guard. Okay. From there, again, but then when it started, I caught it then and it went up a bit. Everyone's giving me shit. I was like, no, Nothing's changed until it's invalidated, which is a change of market structure, which is data. Nothing has changed. And that's why I said, we have not changed market structure. I follow data, not hype, even if it's the president. This is the thing, but we get caught up in these storylines and this and that. It's like, well, if it's so bullish at the president, it will change market structure. It's really that easy. The chart will change market structure and you'll be bullish. And then they all got caught off guard. Okay, so never follow data, never follow hype. Be prepared for all of these different things, so that way you never ever get caught off guard. Okay, all right, guys, I will leave it there. I've given you those key levels. I haven't got any trades because, like I said, I'm not adding to positions here. I'm actually just managing my existing positions. And if any of them change market structure, I will be exiting those positions. And it's as easy as that. So I'm not willing to add money here when I'm saying that there could be a big pullback. So what I'm doing is just, I'm still in the market. I'm not exiting the market, but I'm playing defense. Okay. And just like in sport, if you're only playing offense, you can't win. If you're only playing defense, you can't win. You have to know when to play offense and when to play good defense. I've been playing offense for a while now, and you guys know that. All I've done is weekly trades, This is the first time now I'm telling you I'm playing major defense right now, and I'm not adding positions. The only way I would add a position is if it was too good to ignore. You know, it has to be that I can't ignore this. Okay, until more data comes out, until I can kind of see that we're okay, then yeah, that's what I'm playing. So good luck. I'm playing defense. Okay, I'll clear this up again. I'm not exiting. I'm not selling out of all my positions, but I am managing my positions moving forward. Okay, so that means I'm going to go through all my lists right now. I'm going to look at them, and I'm going to know exactly where I'm going to exit when they change market structure, which is when they stop selling higher and buying higher. If you don't know what that is and you're trying to time the market, you should not be trying to time the market, because that's like trying to build a house without knowing how to even pick up a hammer. All right. So I think a lot of people try and time the market by following people online or this or that, but they have no idea what they're doing. You know, education is the key to success. You need to, educate yourself, even the littlest bit. All right, guys, take care. If you like the video, please like and subscribe, and I hope to see you on the next one. Take care, everyone.